Welcome. You're listening to The Best of Investing. I'm your host, Edward Brown, along with my co-host, Mark Hanf of Pacific Private Money. Nam Phan is off today. Our phone number is 888-912-1190. You're going to use that number to answer the trivia questions for a 5-pack tanning certificate given away during this show. That certificate's not sponsored by the radio station, but by Tan Bella Tanning Salon, with 2 locations in San Francisco and 1 in Marin. Today's trivia theme, again, is miscellaneous trivia. Now, today we actually have a special guest, real estate attorney Dan Dersham. I'll read just a quick little bio, and then we'll get right into it. So Dan is an attorney with Lerman Law Partners in Marin County. His practice focuses on commercial real estate transactions, and Dan regularly represents commercial landlords and tenants, investors, developers, corporate clients, and individuals in the purchasing, selling, financing, leasing, and development of industrial, commercial, multifamily, and residential. I mean, that just kind of covers the whole gambit. All right. Well, Dan, welcome to The Best of Investing.
Thanks. Happy to be here.
Okay. Dan, how busy have you been with commercial leasing and tenant issues in the last 18 months with COVID? Has it been a turn of events for your practice?
Definitely. There was an explosion, I'd say, in the first, second, and third quarters of last year. It started to level off, but it's still a pretty significant portion of work that comes in. Yeah.
How have you found the recovery for tenants and landlords? More specifically, have many of them caught up with rents, as far as you know? And maybe that's more of an industry question for like in the Bay Area, since we're a Bay Area show and a lot of our Bay Area listeners are real estate investors. How is it looking? Is there still a considerable amount of deferred and accrued rent out there, or leases in default? How is it looking in August of 2021?
There's definitely a mix out there still. And like you said, it is very industry specific. I'd say the most common status, that we come across is, leases that have been renegotiated. So lease terms have been extended, rent has been deferred to repay later on. So sometimes forgiveness mixed in there. Another common result has been a negotiated termination, the exit from the lease altogether, and now we're signing up new tenants to these same properties. But then there's some that just I've kind of sitting unresolved, and that's the minority, but it's
for those who have negotiated a termination. How easy has it been for the landlords to release the property?
Depends on if they're going to stick with the same industry, the same use for the property. But brokers are still busy, and there's, for every tenant that has sought to exit, there is someone else seen as an opportunity to get in. And, so we, talking to brokers in our network, that's been the case. There's not been a whole lot. There are some where if there's like a unique use and it's built out to be a personal care service, for example, they might have trouble finding a turnkey tenant to come right in to replace that right away. But
and what about the prices? Have they dropped because of that? Or if you've got, let's say, a like type tenant, what's happened to the rent price wise?
Really depends on the location.
Okay.
Really, even within the Bay Area. But there are plenty of spaces that the value has even increased. And it's real estate will continue to appreciate over time, and rents are going to continue to go up. So I haven't seen a whole lot of new tenants coming in at substantially lesser rent, unless it's a less valuable or less productive use that you'd expect to get a lower rent for.
You said something earlier that caught my ear. The bane of any landlord is the idea of rent forgiveness. And have you seen much of that? And if so, are we just talking, 1 month, maybe 2 or 3 months? How is that turned out in your experience?
We've definitely seen a lot of it, and especially when we represent the tenant. And it's really dependent on the industry specific, and it also depends on the timing of the location and the county and how long that location has been had its shutdown orders in place and what variety of orders have been in place and how that's affected this tenant uniquely depending on their circumstances, because it's a much easier argument to make that rent should be forgiven if you're representing the tenant, if it's a complete shutdown, like a nail salon or something for a period of time, versus like, you know, some other kind of business that was able to partially stay open and keep paying the bills. So it really depends.
Yeah, so I guess it's a little bit of shared pain is the argument. Although, you know, again, if you're a landlord and you've got debt and you've got property taxes and you've got expenses for keeping it up, you know, at the end of the day, the buck stops with somebody. And unfortunately, property owners and landlords have had a very little help in that arena. So interesting to see. Let's continue after the break.
Yeah, we're going to take a quick break, guys. Here's our first trivia question, and it is: which scientist formulated the law of universal gravitation? He didn't invent it. He just discovered it. All right. Call 888-912-11. God invented it. Call 888-912-1190. The first caller with the correct answer is going to win that tanning certificate. Again, which scientist formulated the law of universal gravitation? And I want to make a quick mention here for Polio San Francisco restaurant, voted best San Francisco restaurant among the locals. Check them out at poliosf.com. Stay with us. The Best of Investing. I'll be right back. Well, welcome back to The Best of Investing. Again, I'm Edward Brown, your host, along with Mark Hanf of Pacific Private Money and our special guest, Dan Dersham, attorney at law. First trivia question: which scientist formulated the law of universal gravitation? Dan, you know the answer to that? Or Mark?
I would guess Newton, but
Newton. That is correct, Sir Isaac Newton. And also,
not Newman.
Not Fig Newton, but Newman. And apparently, you know what? It's so funny because he invented a form of calculus, and the reason he invented it was he was getting frustrated trying to explain planetary rotation to his friends, so he invented calculus. I like that. Smart guy. All right. We are in with the studio here via Zoom with Dan Dersham, who is a real estate attorney. Dan, a couple of questions we have for you here. So what kinds of clients have you typically worked for during this time of COVID?
Yeah, it's been a mix of, you know, commercial landlords with varying types of projects that they're looking for help with one or numerous tenants. But equally as common has been just a huge variety of different types of commercial tenants. And I don't know how, why I've ended up representing as many as I have, but I've ended up representing a lot of personal care service type tenants, hair salons and spas, yoga studios, massage parlors, that kind of thing. And that, I think, is because they have been so uniquely affected by this that they've been the most unable to pay, so little revenue compared to other uses. And that tends to not sit well with the landlords. So we've been doing a lot of renegotiations and termination agreements for those type of clients. But my colleagues at the firm have also been representing a lot of restaurants, movie theaters, gyms, that kind of thing too.
Oh.
Do you find yourself with a mix of clients? Are you representing both sides of the table, property owners and tenants?
Definitely.
Yep. Doing both. Yes.
So Dan, let me get your take on this, because I looked at an article recently that said the single mother, now this is more in the residential standpoint, and she owns 3 like little cottage units, so to speak. She's a single mother and an Air Force veteran, and she's the landlord in upstate New York. She's now homeless and living in her car with her daughter after being unable to collect rent from tenants in 3 of her properties. And she says here, quote, "I don't understand how they can give my private property to somebody to live for free." And it says, basically that violates, according to some people, the Fifth Amendment, which is, quote, "Nor shall private property be taken for public use without just compensation." Now, usually that's like for eminent domain, but it's kind of can be, looked at for here. And I guess the thing is that's kind of frustrating that from me, when I look at this, is why wouldn't supposedly the government is holding a lot of money that's supposed to go to landlords for this purpose. rather than just, give it to the tenants and then do anything they want with it, which they don't pay rent. And only apparently 8% of the federal subsidy has been paid out. It just seems kind of crazy that you got to punish one group for another. I mean, and now that's really just in the residential standpoint, right? I mean, in commercial, you can go through a normal eviction, right?
Yeah, the past year and a half has been, it sort of evolved into two different universes. The residential restrictions and those moratoriums and all that has continued even to today, whereas commercial moratoriums on eviction kind of phased out, some much earlier than others. So, needless to say, kind of along what you're saying, landlords with residential tenancies are facing still a lot more challenge than our commercial clients. So
yeah, because they still have to pay their mortgage, right? The banks,
right,
can foreclose on those kinds of landlords.
right.
This kind of seems like it's sort of a wealth distribution,
Yeah,
So-
there have been some programs for refinancing and a deferment on the landlord's finance side that some of our clients have taken advantage of. But that's a whole process in itself, and you need to have someone advising you through that as well and understanding the consequences of it, because those can be some important pitfalls in those agreements.
Well, and we've talked about this before on the residential standpoint, because Pacific Private Money makes loans to borrowers. And Mark, I'll let you explain what happens with these deferments.
Well, several things happen with the deferments, but generally, we're precluded from filing foreclosure right now because they keep extending the amount of time. Unless it's an investment property, then it's actually depends on whether it's a consumer loan or an investor purpose loan. But and by the way, we haven't been that badly hurt. Most of our borrower clients have been able to restart. Not all, but most have been able to restart their interest payments. But it's rather interesting. We did grant quite a few deferments last year.
But the thing I was going to get to is how the deferments kind of sort of hit the credit reports. They're not supposed to show up. It's just strictly a.
Oh, right. Oh, okay. I see. Right. With us, we don't report to credit. So if we do an agreement or an extension or a deferment, or even if they have a whole bunch of lates, generally the private money industry is not reporting to credit bureaus, which is one of the benefits, one of the many benefits of going with alternative to bank financing. But for all of the folks out there that have mortgages, bank financing, they have found out the hard way that accepting a deferment often results in a memo in their credit that allows another lender to see that, oh, well, they've got a deferment. And so that automatically precludes them oftentimes from getting a refinance.
Yeah, so even if their credit score doesn't go down per se, there's sort of that memo, because the bank's looking at it and going, well, how do we know you're not going to ask us for a deferment too? Right?
Right.
Let's see here. Before we cut to one more break, so you already said that the most common resolutions to the commercial leasing disputes have been deferring rent. I guess they don't really
deferring, forgiving, or doing some kind of modification, I guess.
Yeah, I guess in theory, you might want to extend the lease. If you're concerned that you're going to have vacancies, because, as a landlord, a commercial landlord, I don't want tenants to move out. I don't want to have to put tenant improvements in, and I don't want to have to pay new commissions. And the commissions, if you're ready for this, the commissions prior to 2002, the commissions were typically like 66554, that sort of thing. With when you had the craziness going on in the late 2004 with the dot bomb and everything being empty, the commissions actually went 1.5 times, because the procuring broker said, I want all the commission. And then your broker would also want his part. So 666 became 999. It got very, very expensive. Tell you what, hey guys, quick commercial break here. Julius Caesar was assassinated on March 15th, 44 BC, a date now often known by what term? All right. 888-912-1190. First caller with correct answer wins that tanning certificate. Stay with us. Best of Investing. We'll be right back. Welcome back to the Best of Investing one more time. I'm Edward Brown, your host, along with Mark Hanf of Pacific Private Money, our special guest, Dan Dersham. A second trivia question. Julius Caesar was assassinated on March 15th, 44 BC, a date now often known by what term?
Caesar salad?
No.
I don't know.
The Ides of March. Remember, beware the Ides of March? And remember he says, et tu, Brute? And if it was
Yes.
Popeye, he would say, et tu, Bluto? Even you, Brutus? Okay.
Bluto,
Our
yeah.
special guest, Dan Dersham, who's a real estate attorney. So Dan, one of the questions we have for you is, how have the courts been handling disputes between landlords and tenants?
Right. So there's not a whole lot published yet. No big opinions, no game changers in California. So we've been kind of keeping an eye around the country just to observe trends. One of the big arguments that tenants were making specifically is frustration of purpose. Best case scenario, you have some kind of moratorium in place in your county or your city, rely on that, or an eviction moratorium, or some jurisdictions that actually had requirements to defer rent for that period of time during the moratorium. Or maybe you have something in the lease like a really helpful force majeure clause if you're the tenant. Pretty unlikely though, usually it's going to favor the landlord if anything. And so frustration of purpose, which the basic theory is that if the purpose for which you had leased the premises has been frustrated due to causes beyond your control, then the lease is terminated, deemed terminated by virtue of frustration of purpose, which is an old legal doctrine, equitable doctrine. And for the most part, courts are not really going that route. That's not been, instead they're looking specifically to, in some cases they have been, and those are kind of like few and far between, but mostly they're looking to the terms of the lease specifically, relying on that. And there's a huge variety, as you can imagine, force majeure clauses. And so it really looks to what is the tenant's obligation to pay when other intervening events happen. So that's been
interesting because I really like that frustration of purpose. The socially active part of me says, yeah, that makes a lot of sense. But then, as you said, it's kind of interesting. Then there's the real estate investor part of me that says I don't want to use emotions to dictate how contracts should be adhered to. So it's interesting that while that makes a lot of sense to have that frustration of purpose argument against having to be stuck paying endless amounts of rent when your business is closed, it's interesting that the courts are, not trying to make new law.
But it's a situation where if the government is going to force the shutdowns or the moratoriums or whatever, then the government in a timely manner should make those payments. They're the ones who caused it, not, an act of God or, weather or that sort of thing. It's sort of the eminent domain type of thing. If we're going to steal your property, we have to at least pay you a fair value for it.
Well, we're right now, the government is spending money, i.e. issuing debt at historic to our country levels. And the trillions of dollars of aid they keep passing and programs, and yet you don't hear a whole lot about
where it's going.
If the landlord is going to forgive rent, whether it's commercial or residential, there ought to be a government program that isn't sending trillions of dollars overseas, but maybe is making some of that money available for landlords to apply for relief. They can make that. And it should be obviously organized and managed in a way to eliminate as much fraud as possible. But it seems to me that would make sense.
Yeah, let me ask you something. Have the counties been so generous as to say, oh, we're also going to forgive the real estate taxes? I don't think so. How about PG&E? How about insurance companies? How about the plumber who has to fix the leaky, or the roofer? I'm sorry, Mr. Roofer, you have to fix my roof for free because moratorium. Where does it end, right? And the thing is, most landlords are the kind of the mom and pop and they're the ones who are getting hurt the most.
Well, residential landlords for sure.
Residential landlords,
they're the ones that are hurt for sure. The larger commercial REITs and stuff, the pain isn't quite as acutely felt at the personal level.
Very good. Yeah. Any last takeaways here for us, Dan?
Well, the biggest thing is if you have an opportunity to revisit the leases, if you're the landlord especially, it's now is the time to figure out a good force majeure clause to put in there, because that is the quickest answer to any of these disputes had it been in there. And so carefully drafted force majeure clause.
You want to give that definition for the audience, because they may not.
Right. So a force majeure is a clause that says in the lease, okay, if anything happens that like war or a nationwide strike or natural disaster, then the parties are excused from their performance under the contract usually for such period of time that circumstance continues. But the important aspect of those clauses is the carve outs, right? So it's the same, but except for these things, or it might say only these things and nothing else is going to constitute a force majeure, meaning that you're forgiven. But usually in leases, good leases, it'll say something to the effect of, notwithstanding any of this, nothing is going to affect tenant's ability to continue paying its rent. And so the leases that have had that in there, we're able to rely on that. That's just the easiest, quickest answer to those disputes, and really reduces the tenant's leverage, except in the cases of, like I said, those moratoriums. If you happen to be in a place like San Francisco, that's a different story.
Gotcha. Dan, how do people get a hold of you if they have questions on commercial real estate?
Shoot me an email at dan@lermanlaw.com, or my number is 415-991-2949.
Very good. Okay. Quick mention here for Napa River History Tour, kayaking place. Beautiful 2-hour kayak tour exploring Napa's most revealing and provocative secrets. Perfect for all fitness levels and experience. They include the kayaks, life jackets, and paddles. Check them out at naparivertour.com. All right, we're going to cut to our third trivia question here. What is the crucial card in the game of hearts? Call 888-912-1190. You have to know how to play hearts in order to understand this question. What is the crucial card in the game of hearts? All right, when we come back, we're going to have Mark Hanf tell us how his funds are doing. Hopefully he'll have a deal. Will you have a deal of the week for us?
I
Mr.
may.
Hanf? You might. Okay. All right. And Dan, one more time, give out your information and spell out Lerman for those people who might not know how to spell it.
Yeah, dan@lermanlaw.com, LERMAN law.com. And phone number is 415-991-2949.
All right. And again, our trivia question to win the tanning certificate is, what is the crucial card in the game of hearts? Call 888-912-1190. First caller with correct answer is going to win the tanning certificate. Stay with us. The Best of Investing will be right back. Welcome back to The Best of Investing. Edward Brown and Mark Hanf and our special guest, Dan Dersham. Third trivia question, what is the crucial card in the game of hearts? Who knows the answer to that?
I don't play hearts, but I know you do, Edward, so you must know the answer to this one.
I do know the answer. It's the Queen of Spades. Queen of Spades. Okay.
I would never have guessed that.
You never guessed it. Now you have to be a hearts player in order to know that.
Yeah.
Mr. Hanf, can you give us a deal of the week and then back it up with why it's a deal of the week?
Okay. Well, we've talked for the last couple of years about many deals involving allowing consumers to be able to buy their next home before they sell their current home. That's actually about half of our business right now at Pacific Private Money, is doing these consumer bridge loans for people who are in their home. They have a lot of equity and they want to move. They go to their bank and they've got great credit. Maybe they even have cash in the bank for the down payment on the next house. And the bank says, sure, we'll make you that loan to buy your next home, but you got to sell your current home first. You know, because of Dodd-Frank and DTI ratios, et cetera. Yes, you make good money, but you don't make quite enough money to for us to be able to allow you to have two mortgages at the same time. And that's a very common situation for people, and it forces, or the result of which a lot of people feel trapped in their homes. And I know we've talked a lot about that on the Best of Investing over time, and it is a tool that homeowners can use, and real estate agents and mortgage brokers can help their clients buy their next home before they sell their first home. And it's getting even more and more popular these days. A lot of companies are out there offering solutions to this dilemma, but at Pacific Private Money, we are one of the few alternative finance providers that actually provide a bridge loan solution to consumers. But that's not my deal of the week. I thought I'd just share with you something that's a little more in the traditional hard money. We have a client that owns a home in Marin County in a very, very nice area. It's the value of the home is in the 7 digits. Very, very nice home. He's got a first and he has a second and he has a business opportunity. He tied up a condo in Mexico 6 months ago. And in the past 6 months, I guess because of popularity of people wanting to buy real estate in destination resorts, the value of that condo he has in contract has gone up. And so he's very, very anxious to close that condo, but he doesn't quite have enough to close. And so he came to us and he was looking for $1 million third position,
Wow.
business purpose loan secured by his primary residence in Marin County. Now, I'll tell you from experience doing private lending for the last almost 14 years now, that you are most likely to hear a resounding no. If you called 20 hard money lenders, you might get 20 no's.
Yeah.
This happens to be a friend of a friend who referred me to this gentleman, and I happen to know him just because he's also, interestingly enough, he's a commercial real estate investor and owns a lot of commercial real estate. Anyway, we haven't closed that loan yet, but we just talked about it today, in fact, and I'm leaning towards green lighting it because, again, there's still a part of this business that is relationship, and so if based on relationships, based on acute knowledge of the asset, the home, I visited the home personally. I believe it's worth the valuation that we chose, north of that he believes it is north of 10 million. And the amount of debt that's on there would still be less than 50% combined loan to value. So I think he's got something around a $3-ish million first and $1 million second. So our million would still be right around $5 million. So and so this is the kind of opportunity that that comes along with a lot of people who have a lot of real estate wealth and have their assets tied up, and and selling stock involves a taxable transaction. There's just a lot of reasons why someone would go to a quote hard money lender. We prefer private money lender in that regard, but those are still loans that we don't do a lot of loans like that. But again, every now and again, it makes sense. And again, since we are lending other people's money, and there might be someone out there listening going, I would never do a third, or thinking to themselves, I would never do a third. Well, we've done lots of thirds, and it's about the facts and the stories and the situation. My favorite thirds are the ones where the CLTV is clearly and demonstrably below 50% loan to value, meaning you've got protective equity where the lender or the borrower is not going to walk away from that property.
Well, let me ask you, what's his exit strategy? Like how you get your...
He actually has an IPO that we're able to verify is about 45 to 60 days away from happening on a company that he's invested in. And so that's his exit strategy. It's a 6-month note with options to extend. So it's supposed to be, it's designed to be short-term bridge financing.
Okay.
I would not be interested in a long-term situation. I wouldn't want to be stuck on $1 million loan in third position needlessly, but it is a bridge loan situation.
Yeah, and as long as you got the wherewithal to cure the first and second, should anything go wrong,
I would love that house in a heartbeat
for $5 million,
$5 or $6 million. Oh, you betcha. Yeah.
How many square feet is it?
It's rather large, about 7,500.
Okay, so it's probably, if it's in a good area and stuff, it's about 13.
It is. Yeah, I don't want to give too much information.
No, of course not. But about $1,400 a foot for a really nice house in a really nice area is not unreasonable.
It's one of the more exclusive areas in Marin County. It's where the movie stars live. So, anyway,
That's,
it's so yeah. So that
wow.
it's we'll use one of our funds. It's probably not a loan we'll sell. It's relatively short term, so we'll portfolio that loan.
What are you charging the borrower?
This is a 10%, and again, because I have
Good deal for the borrower.
I have knowledge. He's an acquaintance.
Okay.
I could charge 11, I could charge 12, but
Yeah.
again, I'm trying to be reasonable. So 10% is again, it's a fair rate, I think.
And 8 points. No, I'm just kidding. Especially for a 6-month loan.
Yeah,
That's great.
we don't do it, but we don't. But I will go back. Coming full circle, we don't do a tremendous amount of those traditional hard money bridge loans in junior position. In fact, a lot of companies like ours, they're very focused. Some only do first position loans, and that's fine. But I just think there's a market for loans where the borrower needs it, wants it, and benefits from it. And if we can get a higher rate of return, in first position, that loan would be 7%, 7.5%, maybe 8%. So 10% is a nice boosted yield that will help our fund members maintain the yields that we've been paying them. Rates have been going down for the last several years in the private money realm. Many of our seasoned investors who've been doing this for 10 or more years fondly recall the days when they would earn 10% net to them on these types of investments. And you still can, some people, if you hunt around enough, some of the really risky deals will pay net 10 to the investor, but more often than not, our investors now are getting 6, 7, 8% net to them.
Especially with no losses. Tell you what, we're going to cut to another commercial break. We don't have a trivia question, but when we come back, we're going to have a few more minutes and some closing comments. Stay with us. Best of Investing. We'll be right back. Welcome back to the Best of Investing. Last time for today, I'm Edward Brown, your host, along with Mark Hunt of Pacific Private Money. So Mark, you were mentioning before about the fund that you have. You're producing yields for your clients in the 6, 7, 8%. Your main fund's got about 63 million, I believe, in it, and you're still able to produce a net return of at least more than the preferred 7%, right?
Yes, we're in the low 7s with that. The last couple of distributions have been right around 7%, but we've got a mix of loans in there. Some loans that are we've done a couple of years ago that were at higher rates. It's just got a mixed amount of loans, but the way we can achieve a bigger than or larger than 7% return on that is actually largely not because of the loan rates we have. If it were just based on the loans in the portfolio, we'd be under 7 right now, but we're able to turn that money over. A portion of it, about 20% of that 60 million gets turned over rather quickly. And so we're generating fee income for the fund. Every time we get paid off on a loan, we might make a short-term bridge loan that gets paid off in 60, 90 days. Now we get to turn around and lend that money back out again. And since in that fund we split 50-50, the origination fees, it's a way to kind of juice up the yield. And so our fund, that particular fund is different than a lot of California-based mortgage pool funds in that most mortgage pool funds don't see a lot of turnover. They're longer term, 1, 2, 3 year, whereas 30% of our portfolio is turning over every 60, 90 days. So it's a way for us to, plus we sell loans out of the fund too, and that allows us to continually earn back the liquidity to be able to re-loan that money out and generate new fees. So it's a response to what's been happening in the industry. 10 years ago, we could have just been lending money out at market rates for the portfolio and pay out probably an 8% yield. I think that's where we were when we first started out without too much difficulty. Nowadays, with competition, some of the times sometimes we have to make a loan at 7%. So if you're making a loan at 7%, it's kind of hard to pay your investor 7%. But if you're turning that money over multiple times and charging origination points, that's the way we're able to continue to keep a very healthy above market yield for our investors in that specific fund. And that's one of the 4 funds that we manage at Pacific Private Money. We've got a kind of a little smorgasbord of funds. And for more information about that, you can go to our website. We do have an investor page that kind of lines out how the 4 funds differ from each other and the amounts they pay out. We pay from a range of 6% to roughly 10%. We do have a construction lending fund that has been paying out 10% over the last 6 quarters. So for more information, go to pacificprivatemoney.com. You can also call us at 415-883-2150. That's 415-883-2150. That's our phone number. We're in Marin County. We're in a real office, and we're recording this from our respective offices today. We're open for business, wearing masks when appropriate, and meeting with investors and doing Zoom conferences and calls. It's a very, very active market right now, and we'd love to talk more about it with you.
And the best part is you have a lot of deal flow, so you are able to fill that pipeline.
We're extremely busy. The golden goose for any business like ours that lends out capital is you want a lot of deal flow coming in. You want a lot of deal flow because we have to say no a lot. So we're not desperate for the deal when the phone rings. In fact, the exact opposite. We're probably funding 1 out of 10 loan requests, so we can be pretty choosy.
Very good. All right. Here's our thoughts for the day. What do you call 2 birds stuck together? Velcros.
There you go.
And when I was younger and ran a race, they used to time me with a stopwatch. Now I've slowed down a little my old age. They use a calendar now. All right. Tune in next week to The Best of Investing. We're going to be giving away more free prizes for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown, wishing you the best of investing. So long.